Everybody, it's Larry Berman here. Another rock and roll week on the markets. Data driven in part, headline tape bomb driven in part. Let's take a dive into the chart room and see what we learned. But I'll give you a hint. We learned absolutely nothing because we're still in a volatile trading range. So on the economic side, we saw sentiment numbers surprise to the downside. A lot of expectations around tariffs and everything else giving the market anxiety now, and investors anxiety, and consumers. How that manifested in the data this week was a set of reports that came out last business day of the month, and that is the trade numbers, and that is as well personal income and consumption. And so both of those numbers were pretty big detractors. Now, you saw a lot of front running on the trade side. So you had the trade numbers come out, massive imports in the month. Why? Tariffs. So everybody is starting to order early and front run so they can avoid the tariffs whenever they come in. So, perhaps Trump knows this. Perhaps the administration understands, and they're giving a little bit of a delay here so businesses can ramp up and smooth out a little bit as he plays his political theater. But when you look at the GDP now estimate for Q1, we're now talking about a recession in the first quarter. Again, it was driven because prior to Friday's number, we were looking at a 2-point-something% growth for Q1. But because personal income consumption or personal consumption was down, and again, consumer getting cautious, business ordering up, big impact on the net export side for the quarter. So import side. So does that mean this is a permanent thing, or is this a one-time thing? I suspect we're going to see this next month as well. And so if this is the case, technically, we're going to get a recession in Q1. Now, recession, by the way, is 2 quarters of negative growth, and it would revert back once trade starts to normalize, but remains to be seen. Stock market. Let's dive into the chart room here. So, markets tried to break out to the upside, slightly higher highs a couple of weeks ago. Was looking good right here, and then failed back into the range. And last week we talked about the big failure, and likely we'd get a follow through this week, which we did. When you look at the month of February being the second worst month of the year, it's not surprising that the risk-off mood just happened to push investors one way or the other. It was looking really, really bad month on Thursday, and by Friday at 2:00, it was looking worse. If we look at a GIP of the last 2 trading days, so intraday prices of the last 2 trading days, right in around 2:00, markets started to get a better tone, and really in the last 10 minutes of trading shot up another 1% almost. So, very volatile week, very negative month overall. But when we go back and look at it, what did we learn? We learned that the market couldn't break out a week ago. Market is refusing to break down, and so we remain in a volatile trading range. Remember, back in January at the low, which is what we expect will be tested. I thought we might see that today, even on Friday, but we went a little bit below Thursday's low, tried it again, middle of the day, bids came in. So not willing to push that envelope yet, tried to push it on the upside, nothing doing. We saw commentary on the 0-day to expiry options, which on a Friday are magnitude significantly higher, where you had 5,900, 5,910, 5,920. And so as we got up to those levels, that's where the squeeze really started to kick in. And the gamma players just had to hedge their positions, and that probably gets unwound on Monday, yet to be determined. We heard from Nvidia this week. Okay, so Nvidia, let's bring that name up. And to no one's surprise, very similar pattern to the market overall, where we've struggled to break out, but we haven't really broken down yet. And so here's Nvidia. Looks like the mix of demand for chips and the narrowness of demand for chips for training purposes is shrinking. Shrinking in the sense that it's not broadening out. So it's the same names capturing more and more of the market share of Nvidia sales. The hope was that more people would get into the training side of the chip piece, where there's far more margins for them. So there's some margin pressures coming. And, we did an exercise and understanding the difference between the chips in terms of their use in training and the usage around compute. And the demand for compute is less. There's much less margin on that. It's much less intense of a processing time, etc. And so that is starting to come in, and probably why we saw the selling be more aggressive, on Thursday with a slight snapback. So, where does Nvidia go from here? If Nvidia can take out the January lows here, again, that would imply broader market weakness potential. And unless Nvidia can take out the highs, I would argue that it's going to be very high for this AI-led market expansion to take out the highs as well. As markets were selling off in the last week, expectations for rate cuts started to turn up. So it's amazing how much the market believes in the Fed put, and we're not 5% off the high. Like the tightness of the market anxiety, we saw this in some street letters that came out. Strategas put out something that we came across our desk this week. The idea of the Fed just saving the day all the time, I don't think they're going to be there. I don't think they can be there with the Soma portfolio still with a really inability to do QE again, and inflation giving them the inability to cut rates further at this point. I think the market's very, very naive. Now, if this move up in SOFR futures is telling us that a hard landing's coming, then that tells you that equity markets are going to break out to the downside. Further complicating that, President Trump, guess when the news headlines hit that he was going to go with tariffs for March 4th. Now, it could be the morning of March 4th. He rolls that back like he did in February. So those headlines hit here. Canadian dollar sold off, as those headlines hit. Back and filled for that, and came out of the week on the weak side of things. So everything's pointing to anxiety around trade and tariffs. Trump seems to be taking advantage of that. His style, belligerent, what he did to Zelensky on Friday in the media, to me, was wholly embarrassing. But he's moving the needle and he's getting stuff done. So as I weigh how much I hate his style to his effectiveness of getting deals done and trying to fix the system, this is kind of, my balance meter at the moment. Anyways, markets are in a trading range, kind of like the balance meter. and we'll see how things go. But I'm still on the very cautious side, leaning towards the market breaking down before it can even break out at this point. Anyways, govern yourselves accordingly, as they say. Have a great week, everyone.